Thanks, guys, for tuning in, everyone. Yeah, I thought I'd cover in harmonics, a topic that has been coming up a little bit in the chats, and it's a topic that I've been extremely interested in for quite a number of years now. So, effectively, it's just another tool. I want to start the recording by saying this: it's just another tool. So we're not going to take trades off harmonics purely, but there are very good tools that we can use to pinpoint areas of interest when taking trades or when looking for reversals, right? So, what is harmonics? That's a big question. I know someone asked in the chat the other day, is like, what the heck is that? Harmonics are basically patterns that repeat in the market, and they've been studied and found to repeat over and over and over on lower time frames and on higher time frames. They are based off Fibonacci areas. So if you're not familiar with Fibonacci, maybe will be a good idea to do a bit of a read. But what is Fibonacci? Fibonacci is those lines that we often see when we're taking trades. I've got a few areas that I'm just going to actually make a little bit more visible so we can all see. My main key areas for Fibonacci are always going to be my 618, my 76, my 86. We do obviously have the 50%. Some people use the 342. I personally don't like anything below 50%. And why is that? I think it's an important thing to understand before we jump into the harmonics pattern. So, is everyone familiar here with what is a trend? Like, for example, this market obviously is now trending in a bearish trend. So trend is the direction of the market, right? Every trend, and I'm just going to do a bit of a zigzag here. Maybe I'll just move up here. Every market can go up and down a little, up and down a little, up. Now, these are called obviously retracements, right? These are about the retracements. With every market, we need to understand the strength of the trend. So a strong trend is something that retraces not a lot, because that means that the buyers have got a lot of strength, or in this case, I'm doing buyer, but I can be seller, goes either way. So a strong trend is a market that goes up and retraces only a little, okay? So this, if I take a quick fib, this is what I consider to be a strong market, a strong trend, sorry. The market that retraces up to 50%. If the market retraces below the 50%, starts going to 618 zone or 786 zone, the trend is weakening, meaning that we, in this case, buyers are losing strength and the trend is becoming weaker. These are the areas that are going to give you the best risk to reward, because the buyers have got less strength, which means the sellers have obviously exaggerated all of the strength. But if the trend is to continue, then this is where we then see another impulse, right? What happens in harmonics is we are trying to identify those areas of reversal. And harmonics, there's really 5 that you should be aware of, but I'm only going to cover 4 today, and I'll give you the reason as we go. I can tell you right away, if you know what harmonics are, I'm not going to cover the sharp pattern today. Sharp pattern is a pattern that has 2 potential entries, which I personally don't like, because obviously when we're taking trade, we are looking for areas of with the most possible, the best chances of taking a trade. Like, we're looking for probability, high probability trade. Having 2 entries by default for me is not a high probability trade. So we're not going to cover the sharp today, but we are going to start with probably the most common, which is the bat. And this is a freshie from Bitcoin the other day. So I want to show you this, and it's probably the hardest one to see, but you'll see what I'm trying to do is we have higher time frame pattern. I'm on a daily time frame right now. And within the one pattern, we can have different harmonics. Because remember, this is all Fibonacci based. So N's and W's, you can call them, they happen everywhere in the market. We just need to make sure that we choose those levels that are going to be giving us right risk to reward and also going to validate. So if I was to delete this and this one here, which I'm going to on a 4-hour, is what's called. So this is probably the most common pattern that there is in the market, and the reason is, in order for be considered a pattern, it needs to basically go between the 50 but never touch the 618 zone. So, and there is a few different points that we need to be aware of when talking harmonics. And by the way, important to note for anyone that doesn't know how to take an harmonic, when you go into the trading view, you go into patterns. This is what's called a XABCD pattern. This is how we're going to take harmonics. Okay, so XABCD. That's how we can take, and effectively we choose the different levels. Now, you can see that it doesn't start with the A. It was a little bit confusing when I first started a few years ago. Well, why doesn't it start with A? Well, it just doesn't. It starts with the X. So X, B, C, and D. I've also written down a little cheat sheet, which you can definitely screenshot. I'm happy to send in chats anyway. So the key levels for all the different harmonics that we're going to talk about today. So we're going to start with the bat. And like I said, it is the most common pattern because it only retraces up to the 50% area of the X to A area. So that means that it's effectively playing out in a market which is strong or otherwise known as normal, right? So by definition, if the market is normal strength, you're going to find it more often than not. So if I take my X to A, and I'm going to make that 50% really visible, black. You can see that in this pattern that I just draw, X to A, the market only retraces to 50%. If the bat was to go a little bit higher, that's fine, as long as it doesn't touch the 618. Not even with a wick, guys, and this is probably something important that also we need to keep in consideration how to take it. I always take my points from the highest closing candle, right? Important, from the highest closing candle to the lowest closing candle. This means that if this candle here had a wick all the way down here, I still wouldn't take it because this was the lowest closing candle. So this is the valid one for me. I'm on a 4-hour time frame. That's all I'm analyzing, and that's what's valid for me. Okay. So from the highest closing to the lowest closing, I include the wicks, and then again, highest closing in the middle, and then lowest closing. Really, this should be this one, and then highest closing is this one. Sometimes it changes unless you lock it. This is what's called a bat. You can see here on Bitcoin, this is a lot of trade. It retraced 50%, but did not touch the 618. Can you take a trade off this? Of course you can. It's an area where you're basically looking at structure, you're looking for other things, liquidity to be mitigated and whatnot. But really, if you're learning just harmonics today, focus on identifying the patterns first, and then you can look at taking trades maybe at the end of the harmonics, and I'll explain that why. Because sometimes a level might fail and the harmonics completely changes. So this is what's called a bat pattern. So it's really simple. It's most simple out of all. X to A, 50%, and doesn't touch the 618. The other condition in order to be met for a bat pattern is the A point needs to be lower. But you can also have it, of course, if you want to. Just keep on it involved. So that's the same. It needs to be lower than the C point, meaning that this is not a bat. Okay, we'll cover this later, but just for now, know that for the pattern, the A needs to be lower or higher than C. And the other condition in order to be a back pattern is that point D, which is the length of is not does not go above point X. So basically the start, right? So again, you can see, you can probably, I don't know if you can see, they're a little bit small. 16. What's that? Sorry guys, it's so small. I don't like that. You can see these numbers here, they're going to change as I move around. So when I get to 1, okay, this is already a back pattern that is not giving me a lot of confidence. I like to keep my back patterns up to 8, 8, 6. Sometimes I go into the 9s, but any of the 9s I tend to just be a bit skeptical. If it goes above, this is definitely not a back pattern. Okay? This is going to transform into something else, which we'll cover later. So I'm spending a little bit of time on the back pattern because it's kind of like the basis of everything, and it's the most simple to understand. One I've got, there's not a lot of here, a lot of us here, so I'm happy to take a couple of questions now on the back pattern if anyone has any, and then I'll move on to the next. Was everything clear so far, guys?
Can I ask why you didn't use the low wick of C?
The low wick of C, because I like to use the lowest closing candle, not the wicks. Wicks sometimes, as you know, let me answer it in a different way. Actually, harmonics patterns were originally designed by a guy called Scott Carney, and they're not just applicable to crypto. They can be applied to everything, any market, to forex, to stocks. I don't like taking the wicks, the long wicks, because some markets are really quite heavily manipulated, and as we know, wicks can just simply, this can be a 1 minute candle for all we know. And I don't consider this to be structure. So patterns, these patterns are structural patterns. They're not, to the T, to the wick. I'm looking for the structural patterns from where a possible reversal can happen. Does it make sense? Cool. So that's why I personally don't take the lowest wicks. In case anyone recording watching later was saying is why didn't you take it from here, because this is obviously the lowest wick, but you can see this is not the lowest closing candle. So this can be on a lower time frame. It's going to be, if I was to take it on a 1 hour, potentially, yes, I could have gone. I still wouldn't have taken this one. I would have taken this one 1 hour, because this is this candle didn't break structure. It just took liquidity and then went to do a deeper work, basically. So yeah, I always take the lowest closing candle on most of them. Cool. So this is the back pattern. From the back pattern, what happens if I touch the 618, right? Like, let's go back on our drawing here. So this was a bar with X to A. B is between 50 and 618. But if it touches the 618, even with a wick, this becomes what's called a Gartley, which is a really cool pattern. I really enjoy the Gartley personally, because it's in between what's obviously the normal strength trend and the very weak trend, meaning that there's a really quite a good possibility that around the golden ratio, which is obviously the 618, we all love the 618, there could be a reversal. So Gartley is pretty cool. I color code all my different harmonics. So for the Gartley, go green. Once it becomes a Gartley, the same conditions as the back do apply, meaning that the C point cannot be below the A or above if you do the reverse, and the D point needs to stay within or below the X. Gartley, they are very, very good. There's a type of Gartley that is called perfect Gartley, which when you see it, it's juicy. It's basically 618 and 618 follow each other consecutively. So these are all trades that I took, and kind of put them in here so we can have a look at how I took them. So on a 4 hour, what I saw, and let's call it a 4. Yeah, it was a 2. But the 4 shows better, so it's less clutter, but that was a clutter last one. From a 4 hour and 2 hour structure, I looked at the 618 in it. See here, it was hit. Messed up. It was messed up. Sorry, guys, but I did take this trade from a 618, so maybe it was here. As soon as it touches the 618, I knew it was going to be a garlic, which means I'm then going to do the opposite. So I take the A to B, and this can identify the area, which is this area here, where we could be looking at a potential bullish from the end. And sure enough, it did happen. I didn't take this trade because these areas, mind you, they can go down all the way down here. It wasn't for other charts. There's 10 o'clock on the but you can see here, if I do here to here, this was almost a perfect value. 618 from X to A, reached, and 618 from A to B. So this was a beautiful, beautiful trade for anyone that would have spotted that, because that would have given you basically, well, if you took the sell, of course, but then it would have given you a sell here, a buy here, and another sell here. So you could potentially have 3 trades back to back if you learn how to spot garlic patterns or any harmonic pattern properly. So once we've got these 2 areas identified, so we've got the 618 hit tick. We've got another 618 tick, awesome. Then we can look for a bullish shape idea. The next areas that we're going to have to take a Fibonacci from extension is from X to C. And we can see that from X to C, we've got to the 786, 886, and then we actually went above. Do you remember earlier that I said on the back that sometimes and by effectively by association, garlic, because remember, garlic is not else but a final, but it just retracts a little bit higher. They can go up higher, like all the way to the 9s, and sometimes they just go over the 1s. In this case, they actually took a trade. I think it was from here. That's why I left it there. I took a trade, got stopped out. As soon as I saw that there was a break of structure for me, so I did retrade the trade. You can see that he went over just a touch, just a smidge, but not enough to be considered a crab, which we'll cover next. So you can have a couple of entries, but this is where it's important to understand, guys, the risk to reward. Like, I don't like to take 1 to 2s is the very minimum that I take. I never take a 1 to 1. 1 to 2s is the minimum. 1 to 3 is my ideal, and I could have hit a 1 to 3 if I had a better entry here. But yeah, so it's important to know that when you see a harmonic pattern playing out, mark the zone. You can see here like 1 hour selling pressure. That's see on the 1 hour. I highlighted it. It's in red. Up a little. So this was clearly an order block that had interest, right? You can see the volume here. It was mitigated just a little bit, but not to the 50%, which I always mark up. I like to take trades from the 50% of the candle. And if you look, scroll all the way down here, you can see he actually had a reaction there at the very beginning. I could have taken 10. But because I had to take from 50%, I was trying to get a little bit better. If you did take it exactly from there, you wouldn't have hit straight away. It didn't get me there. I got it from here. Boom. And that was my trade. So the Garley, to make it too long to read, TLDR, what is a Garley? A Garley is a failed bat. Okay, so it's a bat that goes up to the 618 instead of the 0.5 and still has that C and D, which are within this way. So this is kind of like the market leg, you can call it. See if I was to draw this, you can see they're still within that. So the whole harmonic stays within this range, right? So both in garlic, this is where the whole thing plays out within the range. Within this exception, which is fine. Sometimes we get what's called just a little liability. Take profit. You can highlight here. You can see how highlighted take profit area. I don't wait for the full harmonic to play out. Hint, it almost never does. I like to take profit to about 50 to 618. So I literally take a Fibonacci from the low to the high in this case. Yep. Sorry guys, I've got my dog coming off in the background. Between the 50 and the 618 usually is where I take profit. In this case, you can see I chose the 618 because I saw this liquidity as potential double low, equal lows, however you want to call them. I'm sure if you took them. Between 50 to 618 is what I recommend doing. You can go down to the 786 if you want. Greed doesn't help. You'll find that sometimes this can happen. There's a reversal, and then look what happens next. Continuation. So you would have missed out on everything if you were trying to be greedy here. So we've got a back color, we've got a garlic color. Next, we're going to do a front, which is a very interesting pattern. So the is what I call an extreme, and I'll explain to you why. So we know now all the colors, all the color happens within the range of the X, Q, and A. So between these two, the whole harmonic is. What happens when, like in this case, the harmonic just pushes through? And you can see here, this could have been, this would have been here. This would have been a garlic, right? 618 level hit, and 618 level hit. Perfect, looks like a garlic. And you could have taken this trade if you wanted to. It wasn't a 50%, didn't quite hit it. So unless you had a 2 years of profit, you wouldn't have picked up profit. But sure enough, what happens after that, the whole market just explodes. And it explodes to what we're going to need to learn how to use now for the crab is Fibonacci extensions. Now, don't be too scared. You can do them in a couple of different ways. You can use the whole Fibonacci. Yeah, it actually gives you, if you're going to use settings, you can have all the extensions enabled. You can do 1618, 2618 if you want to. I don't use that. So I might have a lot of my charts. You can use this also, which is trend-based Fibonacci extension. See here, it's the second one from the top. I think I have started. It's a little bit another one. And in order to do that, you basically just pick low point, high point, and then low point again, and it gives you this area. You need to select them manually, so select 1, 1, 3, 4, 618, 1272, and 2618. These are the key Fibonacci extensions which we are going to use for the crab and for the butterfly, which is the next pattern we're going to use, and also for the cipher. So make sure that you write down these patterns, sorry, these levels. It's a 1.113, 1.414, 1.618, 1.272, 2.618. It's important to understand these levels for the crab, and not all of these levels play out. For the crab specifically, I'm not using the 1272, and I'm not using the 1312. And to be honest, I don't even have to use the 1414. You can leave it there, so we'll leave it there. But the 1618 to the 2618 are the ones that really you want to focus on. Sometimes the crab guys can be all the way up here. So that's why it's such an extreme reversal pattern to see and to spot that. But it's such a big area too, so it is risky. You always need to pay attention to structure. But here, you play out to the T, 1618, which is a beautiful, beautiful Fibonacci extension for any market, for crypto. I love Fibonacci extensions. Look what happened. It failed the range. You can see failed the range. And if I took the X, again, remember how we did it? So I did low, so A to X to A, it was the 1618. Now, how do I take trade? Remember we said we don't just take trades for the sake of it, right? Like we just these are just levels for us to go and look for more confirmations. I trade time frame trading. So I'm not going to go in 4 days, weekly, 3 days, a lot of the 4 days, a lot of the 3 days. And I saw this candle in the 4 days that I highlighted immediately. That was like, okay, it's going to come at least touch it and mitigate it. So I actually highlighted it. It says 4 days selling pressure. When you scale down onto the daily, you can see it literally just licked it and off you went. This is a good example of, yeah, it can play it all the way down. I actually took, I was happy this is a 1 to 4, 4.1. So solid risk to reward there. This is a good example of what a crab can do. And there is a crab, I think, playing out in another BTC, which we're going to cover a little bit later, potentially. So we had a bat covered, which is a 50% within the range. We had a garlic cover, which is a 618, so failed back, so it's within the range. And then we have a crab, which is a failed bat and failed bat and garlic. For the crab, guys, it's important also to know that it's not meant to go above the or even touch the 786. So it's meant to stay within the 618 to 786 area of this Fibonacci key level. So from X to A, Y here and there. So if it touches the 786, which is this red line here, I don't like it. It's to me immediately it invalidates. It's just a pattern. It's just not for me. I want from the 50% to the 618, and it can go up to almost the 76 as long as it doesn't touch it. Not even with a week. So this guy is always just a perfect 76. So 618. So that's just a beautiful, beautiful crap. It's confusing, guys, and that's why I wrote down all the levels for you, which I'm happy to. I'll do a post and you can go back. X to 1A, 0.5 to 7.6. C to D leg, so C to D leg. It's a fails. You can see it goes up to fails, and it's a double field extension. You've got A to X. And then you can also do a second one if you want to be more precise. And this is actually a really good cheat code to have for the crab pattern. So I'll do it with you live. So if I take the fib extension, which is this tool here, remember guys, trend-based fib extension, I do A to X and back. It identifies the 1618. So that's the first area. But then I can also do another once the harmonic starts to play. So which would have been here when you see that it starts to play, you know it's going to be kind of crap. You do an A, which is here. Sorry, A to B, and you come back again all the way down. And this time you're actually going to take the 2618. So you can see them here. I'm making a little bit here. You can see them. So what I'm looking for is an area that is going to be 1618 of the A to X, 1618, and another 2.618 area of A to B and back to A. So effectively, this area is what I was looking for, right? Can you see it? I'm at the yellow. This was my area of entry. And sometimes, mind you, this area can be quite big. So in this case, it was pretty tight because it was such a perfect harmonic, but it can be quite large. So if you see a quite large area, please always make sure that you're taking into consideration other things like market structure, bond, etc., etc. But you can see this is a double fib extension, so X to A to X and A to B. Okay, so guard level covered. You can see X to A 618 and A to B 6 covered. Next is the butterfly. Butterfly pattern is a failed pattern again, but this time it doesn't fail up or down. I'll show you where it does. It fails in the sense that it goes above the 786. Remember that so far we have played within the 50% to 786 of the X to A range. You can see here, we've got so high on this retracement. We still didn't go above, but this is still considered a butterfly pattern. So if I was to take X to a Fibonacci, the closing was actually within that, which is great. Immediately, I know that this could be a butterfly pattern. When it starts to move down, you obviously want to look for the market not failing below this line again. So everything needs to stay within X to A until the next leg, which is the C to D. With such a large retracement on the way up, we know that the market has really lost strength. So we know that we're going to have a large move down. Sure enough, almost always happens. But it never goes below, or never should go below for a butterfly pattern, the A level. Now, this is going to get a little bit confusing again because we're going to need to use the fib extension. So we take our little fib extension tool, which is here, and we now need to look for, again, another area, but this time is only one extension, not two like the crab, only one. And it's from the C to the D. Sorry, apologies. That's the area. It's the fib extension. The C to D leg is 1 for 1 of the A to X. So from the first one to the top to the first again, you can see I've got a 1.618 and a 1.414. In order to be a butterfly pattern, you can have 1.13 and 1.27, and that's what Google tells you. If you Google butterfly patterns, you'll see that sometimes, if not almost always, they tell you that 1.13 is a valid level and the 1.27 is a valid level. I don't take them personally. Why don't I take them? Because more often than not, they're not strong enough. They fail, and you can see here, 1.27 failed. 1.13 failed. It just went up. Whereas I found when using the harmonics that the 1.414 and the 1.618 are the best areas to take a sell. Do with this formation what you want. Use the 12.72 if you want. You'll see that it does fail a fair bit. Definitely the 1.13 is garbage in my opinion for the butterfly pattern. But the 1.272 sometimes it works, not enough time for me to keep it. And so do it. 1.618 on the key area. So you can see I'm going to highlight the area, took the trade, and sure enough, it was again. It did go a little bit below, but that's why I like to take my 50% profits. Because if I got if I got C to D, you can see I was in the 50% area right there. as soon as I started selling that, boom, took profit, and the market then moved up further. So this is the butterfly pattern. They can go up to the 1.618 all the way, which is sometimes it gets a little bit extreme, but once you start going past the 1.618, I tend to be a little bit skeptical. It just, yeah, it's not a valid butterfly for me. So these key levels are really important, which is why I brought them down. If you're gonna be new to harmonics, especially, make sure that you don't just wing it. Keep these levels in mind. They've been back tested. Try to stay within these levels. You can go lower, you can go higher, but this is a good starting point for anyone new. The last trading pattern before I take some questions maybe is the cipher. Cipher pattern is a fail. So again, is it failed? I'll show you. Other way around, so we can do this one as well. So it fails in the sense that it's not within the range anymore. Look at that. The X2A, it actually went down. So this is what happens when a pattern fails. Important to know though, guys, that in order to be a cipher pattern, which is a beautiful pattern when you spot it, it needs to stay off the X2A Fibonacci extension between the 50%, which is this, between the 50% and the 76. So within this area. You can see that it does. In this case, it was 618, so no problem at all. But if it starts going a little bit too, like above the 786, it's no for me. I'm not going to consider it a cycle pattern anymore. So X2A retracing from 50% to 786, and then the B to C leg. You can see here, I brought it. Leg failed, and we also need to calculate with the fib extension where it's going to fail, because it needs to fall within a range, and the range here of the failing needs to be the 1.13 to the 1.414. In this case, the 1.13 was just split. But that's how it needs to effectively fail. Once I know that that's going to be hit in quite a big range. In this case, we're looking at what is that, 1.9 to 2 for band. I know there's a cipher pattern playing, and all it needs to be in order to be a valid cipher pattern is it needs to take and retrace into a new area of liquidity. What do I mean by new area of liquidity? You can see that the liquidity, the intraday liquidity here was here. This was the liquidity. There's a high, there's a high, there's a high. So this was the liquidity. As long as this pattern effectively comes and grabs an area of liquidity, so it goes above or below this high, then it's a valid cipher for me. I can start looking for short ideas. Here you can see it reached the new liquidity. It was a new area for me. I marked it. I liked it. I think it was a long time for me to trade. Trying to find it, but yeah, it was that kind of look. You can see he literally just smacked it, and then wow, right? Yep. I was playing off this kind of. And yeah, again, 50% of this feature we made, 50% to 618 as my area. Take profit. I did take profit here. I didn't actually run all the way. But if you can, you probably heard this before, let your winners run. You can always take partials. You don't have to exit the whole, especially in crypto. You can take your partials out. You can take close 25%, 25% if you want. Don't feel like you have to exit the position all the time at once. cipher patterns, especially, they tend to run a lot further than other patterns. Like we've seen the garland, we've seen the butterfly. They often reverse, whereas the cipher actually tends to run a lot more. So something to keep in mind there as well. And then BTC, which is I think what we were looking at the start of the session. So there's a couple of patterns here that are playing at the moment, and one is already a lot of yeah, just clean up a little there. Yeah, okay. There's a couple of patterns that are already like just happening as I can speak. So this was a trade of one, and then you can see this on the higher time frame under the which is this there. And if you can tell me now that we've done anyone can tell me what kind of this is. I'm just on there anymore. I don't know if you can see the level, but it's 8.23 of the X to A. So it's above the 76. Anyone sort of stab at what kind of pattern we're forming here?
I guess it's Gartley maybe.
It is not. It is not because it is in fact a butterfly. And we use a little cheat code that I prepared. Yeah, I'll pop it at the top. So, there you go. I already did it. And the galley, it needs to be within a 618, right, to 786. But in this case, we've actually invalidated the 786 level, which was here. We went over. You can see with this week, we went over. So the next thing after the galley, it's the butterfly, which is the XUA between 786 and 886. So this is the butterfly forming, which means that we are going to take our fib extensions. And the fib extension, if you guys remember, where this little tool here, all we have to do is you take A to X to A again, fib extension, and with the butterfly 1.414 and the 1.618 area, which puts us with a BTC of around 87, 90, 82, whatever that. So I'm expecting this move from BTC, and this will be a perfect butterfly plane. So it's invalidated the Gardley, it's now become a butterfly. This is where I'm expecting we're going to land eventually. But in the lower time frame, there was also other, you can see here, this was also another butterfly, played out one, and actually another butterfly. This was probably that was a crab. 1.2. Wind crab, or still a crab. You can see you can have multiple harmonics within one harmonic. So that's why it's so important to always go higher time frame first in terms of structure, in terms of high time frames king, guys. Like there's no escaping. If you try to catch harmonics on a 15 minutes time frame without having an idea of where the direction is going on the market, you're gonna get wrecked. There's multiple harmonics. So this is our harmonic. I can see there, to there, and this was a bat pattern right there because it went to 541. But you can see it wasn't strong enough. It didn't actually hit the tip. Oh, actually, it did hit. Yeah, that's right. It did, because if you took that there, line that up. Go away. If you take it there, that was a TP 50%. So you actually ended up playing out. You can see that. You ended up playing out. So yeah, always do high time frame first. That's the number one rule. Number two rule is probably just always keep in mind these levels, which I'm happy to send to everyone. What will be there as well. So for the back, we don't want to retrace over the 618. In fact, we don't even want to touch it. When a back fails, becomes a godly because it touches the 618. When the godly fails, becomes a butterfly because it touches and it goes above the 786. And when the butterfly happens, also the X2A leg fails because we go higher. And that's when we start using our fib extensions. And if a bat and a godly fail to stay between the X2A range, they then become a deep crab going between 1.618 to 2.618. And if the X to A leg of the C to D, B to C fails, so it goes below, it then becomes a cipher. It's a lot to take in. I try to keep it under an hour, but it is a lot to take in. So, any questions? I'm happy to take anything. I think Pacific Mafia is like, what? So sorry, just we're alive.
Yeah,
No, I think
a good first step before learning harmonics, learn fibs.
I just looked at the chat. Sorry, you couldn't hear me well. I just saw it. Oh, shoot! I hope you can.
I mean,
You could
sometimes
hear
it
me.
lags out, but most of the time it's
Oh,
yeah.
oh, yeah. It's probably because I was screen sharing. Maybe I'm saying this is fine. Yeah, there is a lot. So how do we know which harmonic to play? It was muffled at the end. Okay, so which harmonic to play? So these areas are going to be your Bible to learn harmonic. So basically, you always want to start with a bat, right? Like a 50%. So, and you always work within the range. So this is a range. This is a range, right? If you're working within these ranges, so you know that this is a bat pattern. You can see that it's a 50%, and this is your most common pattern. From here, you kind of work your way up. So if the market starts to fail and goes up in one direction, then you know that you don't have a bat anymore, you've got a godly. So you can expect from a godly another retracement. So you start looking for shorts in this case. What happens if that fails again? Well, then you're into a butterfly. And if you know that is a butterfly, then you know that you're not going to work with this range anymore for the last leg, and you are in fact going to go somewhat higher. So when that 76 gets touched, you know that you're going to go higher, and that's when you start looking for structure like we do now with BTC. We know we're going to go within the 82K range. You can also do the same principle and work your way around when you start to fail. So if you've got this and this and this, and then C fails, then you know you've got a cipher. And with a cipher, you know that you only need to go above the new range of liquidity. So it could be a very small cipher. And mind you, harmonics, they don't need to look pretty all the time. They can be ugly looking. As long as you keep them, you know, take your points correctly, which is your highest closing candle, your lowest closing candle for every point. If it's a cipher, then you know that, cool, all I need is a shallower retracement, and I'm probably going to get a continuation too. So you know that this short and this is going to go for quite some time. So you drew the first half and the second half of the harmonics. Is the prediction? Yes. So when a harmonic is playing out, you don't know where the market is going to go, right? Otherwise, we wouldn't be here. We would all be millionaires. But what we do know is that we can go by levels. So this is a level that I know now Bitcoin has retraced. This is on a 4 hour, so it's a fairly decent time frame. Has retraced past the 786. So this is playing out in front of us to be, I believe, a butterfly pattern. With a butterfly pattern, that's where you've got your extensions, and you know that the extensions, we covered them before, but these ones 1.4, 1.4, 1.6, 1.8. If I want it to be 1.27, like I don't really like it, but you can. It will give it to you at 1.272. So there, if you want a broader area for where I think Bitcoin might end up, it's between 77 and 82. Make sense? Awesome. It's all good, man. This is it's fascinating because for me, Fibonacci is really probably my favorite way to trade is Fibonacci and identifying key areas and liquidity. I know XA also likes those things, so they do work. You just have to make sure that you follow the rules. Don't just wing them. Don't just you need to be quite precise with levels and key levels when you take harmonics. And always remember, don't just take levels because you think you're seeing that or you want to see that. Just be, yeah. And definitely Pacific, yeah. Fibonacci is key. That's what I said. This is probably going to be a mid to more experienced traders because it revolves around key areas of Fibonacci extensions and also levels. So, which it sounds really hard at the beginning, but once you start using them, they are pretty easy to identify. Yeah. Then you trade up to the so just do that. So wait for that one to hit the C and then yeah. So when I want like in this case, so X to A to B to C, I can see that C didn't fail. So did in fact respect the range, right? Like you can see this was the range and this was the range. So it respected that range. Once I start seeing this, yes, definitely I know that it's a butterfly pattern. If for whatever reason this was to happen, this is nothing. It's because it went too high for me to be considered a cipher. If you remember the cipher, it's between the 50% and 618 or 786 max touch it, but this was way high as 8.23. So this wouldn't be a valid one, but yeah, this is definitely valid. This C2D, this is just prediction, right? But we can, based off levels, have a solid understanding of where we could potentially end up with. So, which means if I was to take a long now, because I've taken this successful short, if I was to take a long, this could potentially be my take profit. But we're talking days, not weeks. Like this is on a 4 hour, so yeah. Higher time frame drops. How did you draw the short from that? Great question. This was a short that I actually put on the alpha the other day. So I took it because I saw this liquidity being snapped, and then I saw this huge imbalances down here. So I knew that they were going to need to be mitigated. I was actually late to the short, to be honest. When I saw this is an area obviously where we know there was going to be selling pressure. There was a reaction there. As soon as I saw this reaction, like, okay, I think we're lower. So I saw a break destruction past this long, and really, to be honest, it was past here. But as we kept going lower and lower, I knew we were going to end up somewhere in this area. So I took a short. It was a current market price short. I put it on the channel, but it was a little bit. I'm coming out. So, awesome. Can you hear me? Oh, okay, yeah, sorry. I think I'm doing too much. Like I'm sharing, I'm drawing. It's too much for the computer. No, but this was a mnemonic. Also specific. This also was a mnemonic. That's why you can see I've got the TP area highlighted, and this was a Gartley. So this I'll show you. That's what I had at the start of the session. So this was a Gartley on the 1 hour. So high point, highest closing candle, to lowest closing candle, to highest closing candle, the lowest closing candle, and the levels specifically were 6, 8, 9. Yeah. So you can have smaller harmonics inside bigger ones. That's what I mean. But this was a Gartley. So 618 between 7 and 6. That's exactly right. Short from the D. I saw that basically this was starting to break structure. So actually, you can see I didn't take the trade up here because I remember that I said at the beginning of the session, I don't like when it goes just above. I want to see the reaction. So, and I'm glad that I didn't because I wouldn't have stopped there. As you can see, we went past the X. We went up a little, right? But not enough to be considered a clean. So once we started breaking this structure, we were back within that range of X level, which would have been somewhere here. I was like, cool. This is a bearish. I think on my channel, it's getting me bearish vibes. This is what I mean. So on the short term, this was a scalp. Broke structure. We went back this level. I didn't take it from the top, but I took it from here, and then from take profit. All I did was G to D. You can see I've got my TP area, which is between the 50% and 600. Yeah. So, I'm glad you asked me. Otherwise, you think that's right. Just the coffee's good. No, I'm here. Can you hear me? No.
Yeah, we can hear you.
Oh, okay, sorry. I thought I was rugging again. Yeah, cool. No, not for the last 30 seconds. Okay.
Yeah,
I just said.
it's bugging a bit.
Yeah. No. So basically, that's how I took the trade. So I took the 1 hour harmonic within the larger harmonic, and then as soon as we basically started going back within that range and started breaking structure to the downside, that's how I took that sell. That's correct. Yes, it broke structure from the D, so I shorted. Yes, but I didn't take it's what I was trying to convey, which is important. I didn't take the trade from 71, which was the previous high, because we actually ended up going higher. And I didn't take that trade because we could have gone up to a crab, right? Like it could have gone up to here and be a crab. So I didn't want to take a trade until I see a breaker structure. It didn't end up going up there, so yeah. So long up to the short backs down. Yes, correct. Yeah. So that's why harmonics are powerful, man, because you can take trades up, down. Like these are potentially 4 trades. 1, 2, 3, 4, 5 actually, 5 trades if you wanted to, but this one really just telling you. So 1, 2, 3, 4. But I try not to do it because it goes against my my trading plan. I don't take more than 3 trades at a time. So yes, I've got the specific criteria, and then what I'll do, I'll just do some screenshots of the ones that we went through today, and I'll fall back onto these ones on the channel so we can pin it, and we've got some visuals as well to fall back on. Not the easiest of topics for someone that doesn't understand Fibonacci, so props on you for being here. Cool. Yeah, that's harmonics, guys. Powerful things. A bit confusing at the beginning, but once you get the hang of it, Start paper trading. Yeah, fibs are easy once you look it up. The levels and all the key levels for the harmonics is what it helps. And to be honest, guys, like it really helps to have them here always, just when you're starting. So you know how to take the trades. But I'm gonna cut it. I'm gonna say thanks heaps for being here, guys. Say thank you so much for recording, brother. Really appreciate everything you do.
Thank you for showing us how to do this.
Oh no, pleasure. We've got an awesome group here, so I'll let you guys go. Good night, good evening, good morning, whatever it is. Love you all.
3 a.m.
Oh, jeez. I'm so sorry.
No, no,
So sorry.
I'm usually waking up either way because I work like
Oh,
almost American time. So
oh, man, I feel bad. All right. Well, thanks heaps, guys.